The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this third day of October. My pleasure to be here Monday through Friday, noon till 1 p.m. I did do the 9 a.m. Eastern Time show this morning for Larry couldn't make it, Larry Pesavento, so it was a pleasure to do that. I'm going to go through a couple of things that I did there that I thought was really interesting. Let's do this. The Dow is at an all-time high, up 148 to 26,922, just on the border of 27,000. Couple of things just for those technicians that use the Chapman wave methodology. This is something that I discuss rarely because it's really a technical thing. Maybe on a Friday occasionally I'll just mention it, but let me just show you. From that peak D doji high that was made at 26,769 the 21st, yes, there was a sharp pullback, three big red candles. We haven't seen that in a long time. And then it stops dead at 26,349 and starts to rally, then gaps up on Monday. So we got Monday high, Tuesday high, and today Wednesday, right in this Chapman wave inside track repellent zone, getting real close to very strong resistance just based on the trend line. There is no resistance in reality because it's all-time highs. It's like a skyscraper. Once you get above a certain height, you're in the clouds. So this is in the clouds, but here's what I wanted to mention. I had to take away the down arrow and go back to a plus sign, because in the Chapman wave methodology, unless there's a sharp close below in the MACD, the moving average convergence divergence here on the daily chart, unless that green line goes decisively lower with the price, and the price closes, I like to say 2 days below the 9-period moving average out of 3, this was just 1 day, and then it bounced back. There are times, and now I can say there are enough times, this is a learning process. This is one of the few techniques that I know of that really wants to, this is the Chapman wave is the waveform that never sleeps. Every single trough and every single peak is counted, and that's really the beauty of the whole thing. So what I am looking at here is this V-shaped recovery. This is the bar that is going to be critical. I'm calling it E. It could be an A, but I'm calling it an E. The MACD is bouncing with an M-shaped pattern. The red line, the slow-moving average, is still rallying, so it still has to see a lot of downside move to be able to see the faster green moving average cross negatively, to go underneath the red one, and then see the red one turn down. It's going to take a little process, or it's just a massive, sudden, bad news thing where you get a 350 to 400 point down day. And the stochastic is at 82%. It's good, it's not great. It's not as good as it was before, but it's good, and on-balance volume is very strong. It's the weekly chart that I have to focus on. I've been talking about this and saying, it's really upsetting when I see this because it was just so obvious. It was a buy when the MACD crossed positive and just should have stayed that way, just a buy, and you just hold it and forget about it until the MACD and stochastic, now at 95%, start to deteriorate, and they haven't. And this can actually go along for about another 2 weeks, which would fit in this Chapman wave inside. Look at this, peak D within 3 bars making new high, and then the next bar, the third bar, goes underneath the bar of leg D of 24,983, goes to 24,965. It's just 13 or so points below, but that has the potential to be a Chapman wave flat base restart. All right, enough technical talk. Let's just make it simple. Until we get a really sharp turnaround, this is still very good action, even though it's leg E in the daily. And it says major support is at the gap low around about 26,600. And at this particular time, you've got resistance still a little bit above 26,000, the 990s getting to 27. Can you believe 27,000? So 27,000. And that suggests to me that there are just enough stocks in the Dow to keep moving it. And I'll explain why I'm saying just the Dow, because look, the S&P At this point, it hasn't made an all-time high. It's trying, it's failing. 2340.41 was the high of the 21st in peak E. I'm thinking it could go to an F, but it's struggling. The high today is 2939.86. Hey, 60, 70, 80 cents below. It could have made it. It didn't. But here's what I'm looking at. I think that there's a chance that we're going to go to that D in the weekly chart. There's that instant restart at peak D with the 3 bars. You make a higher high. So that says still some strength left in the S&P. And now we're going to go to the parameters. At 29.42, it's really a big breakout, and it could go even higher. But if it doesn't get there, if it stalls in the 29.40 to 41 area, and then reverses sharply, goes under 29.32 to 29.27 support, that's going to be negative. Hasn't done that yet. Hey, the QQQ, this is what I'm talking about, these divergences. The Qs, 29.40. The Qs, 187.53 was the high of 3 days ago, struggling to get there, but not failing. And the MACD is good, and stochastic is okay at 81%. The weekly chart has gone to a leg F. I've got a feeling that we're going to see a stalling formation in the Qs. The IWM has already done. The Qs at 188.90 is very good action if it can get there. But if it breaks and closes the next week under 184.50, says just be careful here. IWM, the Russell 2000. Russell 2000 trading up, woohoo, up $1.20. Finally, you've got a nice turnaround. I mentioned yesterday we're getting close to some kind of a bounce. So here we are. We could see the Russell 2000, which made a peak F at 173.39 on August the 31st, and plummet down to a trough F if this is the low for the day, and it's higher than yesterday's low of 164.18. We're at 165.73, real nice move. But it needs to close decisively above 168.50 to say, hey, we're going back to the highs. At this point, it's just a bounce, treated as a bounce. If it breaks under 163.50 support, that is really not good. Here we go. I wanted to go to the gold. Gold was a little bit down last time I looked down. It's down 3.50. I said yesterday, I think that's a fake out. I think Goldman Sachs has done this for a couple of reasons. Maybe we'll find out one of these days that they actually lightened up their positions, even though they can say, oh, we're holding gold. But this said to me, because gold spiraled from the 192-ish area, goes all the way to 1212, and now it's at 1203. And my contention was that if the euro didn't also spike, and if the gold stocks didn't manage to spike huge up, then that's a problem. And yeah, you got the euro down 0.002 at 1.152. Doesn't look good. Doesn't look good in the daily. Doesn't look good in the weekly. And the monthly is kind of holding in a sideways pattern. If you look at the USD JPY, that is the yen, very nice breakout. Now, this could have been a Chapman wave instant restart. I can't believe how many charts have these instant restarts in the leg D. What a fantastic technique. It cost me a lot of money to learn about 30 years ago. So here we are, leg F to the upside in the daily chart. It could be an F-3, leg D in the monthly, and look at that dollar. Dollar is holding very well at 95 cents. Right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So the S&P E-mini is up 12 at 29.40. Just make it real simple. If there is a close in any bar, a 5-minute bar, a full 5-minute bar that closes above 29.45, that's going to be very positive. And if at any point there's a close below 29.35, that's going to say we've probably seen the high of the day and there's going to be some weakness coming in. Right now, it's just this buying strength that keeps pushing higher. Now let's go back to what we were looking at in the dollar. Dollar is at 95.69. This is very important because in the Chapman Wave now, when I did Larry's show, I just mentioned it, but there's no way I was going to even discuss it because that's not my technique. You know, Larry has completely different techniques. His viewers are used to different techniques. In the Chapman Wave methodology, there's a technique that I call the Chapman Wave stalk leg formation. What it says is there's a powerful move to the upside. It can have a number of legs. It's not the point that it has legs. It's just kind of like a straight up move. Then all of a sudden, it stalls and it goes sideways for a while, quite a while. And then it makes either a D or an E, and then there's suddenly, and it has to look like an oval. That's this oval. So this is the leg. All these peaks make the leg in the broader sense. And our stalk stands on one leg. Then there's the body. And you know, the body is oval. And that body I usually make pink with yellow when I've got the white background. And what happens is, if there is a spike above the arch, it has to be an arch. It mustn't look like a rectangle. And this looks exactly like an arch, like an oval. When there's a spike above the high, in this case, it was the high of 90, that double top, 95.53, 95.53. And all of a sudden, there was a move of 95.65, and then a move back into the middle of the body, touched the 9-period moving average, the green line. And then there was a spike. That makes the neck. Now, you don't get a head in the bird of the oval. What happens is sometimes it's just an immediate turnaround at an E or an F. In this case, it was an F at 90. It was just one tick off 97. So we go from 90.07, where we went long, subscribers, through the UUP. That's the dollar bull ETF. And then it pulls back sharply, but it doesn't break both the low of the oval, that's really important, at 93.71, so that it will test the orange 200 period exponential moving average, the 93.21 area. What this particular pattern says, and if you don't mind, just for a moment, I'm going to show you one of the patterns right here, because the Dow has a very complex, but I've got the chart and I just want to show it to you right here. So this is the pattern right there. And we actually had, in miniature, we had this stork leg body and then the rally and then a pullback to touch the top of the oval at 18,351, and then it took off, and then it made another pattern called the Chapman wave propeller shaft, where this whole oval pattern, sometimes a rectangle, becomes a fulcrum for another move like a propeller shaft down. It makes the same move to the upside, sometimes either a little less, sometimes much more. This case, much more, and now you have to look at a different pattern. Okay, so this is now very important, because you see this thing, you got the leg, you got the body, you got the neck, and then you've got the beak. Now let's go back to our story here. Yes, correct. People have mentioned it. This, in some kind of sense, also looks like it in the weekly chart. But I like long. I like the oval to be a real oval, not just a little couple of bars. So now we're going to go back to the dollar index, because this is very important. If the dollar keeps rallying, it's going to confuse a lot of people in different areas, especially the multinationals. The rule of thumb is that when the beak completes, and you're looking at a weekly chart, the daily certainly gave us a fabulous turnaround, but the weekly, and this will be a very important week, because if this week we're sharply above last week's high, that's going to be good. That's going to say the rule of thumb is that in the Chapman wave methodology, when the beak is completed, there's a powerful rally, and then you're on your own. And I explain that. I know I've discussed it here. As long as I've been at TFNN, I've discussed it, and it's just the weirdest thing. But now you're on your own, and you're on your own means this is still a gray leg A. But I can just tell you this: that if the dollar starts to move into the 95, it's a 95.69. If it can close at 95.83, and then within a week, if it's able to get to close to 96, this is a brand new move in the dollar. This is really important. So that's the way I'm looking at it. And key support now is at 94.80 to 94.40. I'd say it goes below that. It says, nope, you're back to the sell mode in the daily and the weekly. But this is very good action. Oh, okay. I don't know if I even did I do the euro? Yes, I said the euro was failing. Right. And the yen was moving up. That's very important. Now let's just go to silver. I haven't done that. Silver is up 7 cents, and it's a little bit better. It made a peak E if there's no new high today. Silver is telling me that the gold and silver complex mustn't be ruled out. It is unusual to have the dollar and gold go in the same direction for more than a couple of weeks, a few weeks every year. It happens a few times a year. Sometimes it's longer. Only directionally, not percentage-wise or anything. But what's really important about this is that the MACD in the weekly chart, it would take silver a move into the 1545, 1553 area, I think, to get the MACD to even be close to crossing positive. The histogram is improving, the little vertical lines telling you the distance between the 9-period differential and the slow-moving average, the red line, 26-period moving average, getting closer. But that's it. And the monthly chart is really, it looks just terrible. So it's going to be very important how this unfolds over the next week. Crude oil, we got the Fed rally. The Fed rally says every drop is going to be bought. Every dip is going to be bought. And at 75.91, the high yesterday, I think we're going to make a leg D above 75.91, and then we're going to be a little careful. That's all I'm saying. The MACD and stochastic are outstanding. Let's see what happens if there is a leg D to the upside, leg F/B in the weekly, and the monthly is leg E. Fabulous move. I showed this earlier when I was on with in Larry's show. And look at this. It looks great. And then all of a sudden you put it into context. Look at this. Crude oil was once over 200. It dropped a little bit, dropped down to 39. It's actually 38 because it gets smoothed out, this continuous contract. And now we're trading at 75. So it's had a double, almost a double, and that's good. But we'll see where this starts to find a lot of resistance. But at this point, 76s would be my target on the upside. Let's see what happens. TLT, this is something that I've followed very closely for a long time. Is trading at 115.46. Yesterday I said this particular chart pattern, where you go to 116.51 back earlier this year, then you rally in an arch formation, hit the 200-period moving average, pull back, go to 116.09, rally, go to just over the 200-period moving average. No, can't stand it. Gets repelled, and it plummets down to the two out of 3 weeks. 2 weeks of being in the 116s. Suddenly we've broken to new ground, and let me show you something here. Look at the 30-year, the 10-year, and the 5-year breaking out in yields. This is momentum. Basil Chapman, Dow's up 160.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone, we're back. So Wood, WOOD, iShares Global Timber and Forestry ETF. Look at that lowercase h pattern, yet another one. Going to a low leg D. This is not on the weekly chart, down at 74.10, down 72 cents. Not good. Look at the Philadelphia Housing Index, not good. The lowest low. The toll came out with earnings, and it got tanked. At first, it looked good. So this is not good. This has to do with this thing right here. The 30-year is the white. It's in leg C in the weekly chart. The TNX is up at a new recovery high. It's very important. The 10-year, the cyan one, and the FVX, which is the 5-year T-note yield, is also, it's at 3.04. This is big stuff. Remember, we're looking at 3.0 in the 30-year. All of a sudden, the 5 years. This is very interesting because we're looking at this cup formation, and it's something to take note of. Now, I want to get out of that. I want to go to questions. A lot of good questions. So one question that's popped into the den. Fletch wants to know about the Stork Lake Formation. You know what, Fletch? I'm going to try to deal with that. It doesn't have to be Technical Friday. I'll try to deal with it tomorrow. I did just mention it briefly to you. I went to the wrong chart. Okay, this one here. Let me just say that there was, in fact, a very small neck and then beak, and it did kind of what it's supposed to do, but I decided I wanted to call this entire thing a neck because there's another pattern. You see this little yellow around about 21,169 back in January of last year. That little yellow Chapman Wave instant restart started a propeller shaft pattern, and that's really what we're talking about. Now we're talking about the cup formation. Oh, I don't want to get into it now. It's going to take too much time. It's nothing to talk about right at this moment because it's the monthly chart. We still have to make a top in the weekly, and then we still have to start the whole top in the daily. So let's get to that. I'm going to talk about it. I will talk about it for sure. And a question I had was right here. BHC, this is BHC is, that's the new Valiant Pharmaceutical notation. I forgot about that. I did do some work on this before. BHC is trading at 28.10, up 85. So the question I had, was it a statement, a question? Yeah, George mentioned this to us, Valiant, way back. It was in the 14s or something. He's done fantastically with us. Really great call, did the fundamental analysis. The daily is in A, B, C, D, E. It's in leg E, a little toppy in the daily. Weekly chart is A, B, C. This is leg D. It might be getting a little overbought, but it's actually acting really well. The technicals are all confirming. So the question is, good morning, Basil. BHC to me is looking good on daily, weekly chart as well as monthly. Please check your charts and see what your thoughts are as I am looking, if I'm looking correctly. Thanks, George, New York. Yeah, George. So I'm going to just say to you two things. One is the fundamental work you do, not always 100% in terms of timing, because you have a lot of patience. You're quite prepared to sit things out for quite a while until they kick in. When they kick in, it's fabulous work, really good work. I have to congratulate you, just sitting there doing your stuff independently. I like that, and it's been proved a number of times now that you've done really good analysis, and that's important. And it's not that, so you've got a trading plan to match. So yes, at this particular point, I would just tell you that key support is between $26.10 and $25.30. That should hold on any quite sharp pullback coming up. Really good action. I like it. And that monthly chart is beginning to really improve. Good eye and good holding. There's nothing wrong. Everything you've done so far is correct. The only thing I would say to you is keep in mind, we discussed this once before. I'm not sure if it was Valiant, but I discussed gaps, and I'd say that gaps, I've seen gaps. There are gaps from 2009 that have never been filled from the low of 2009. So gaps are only like a 200-period moving average. Do I care that the 200-period moving average in the monthly is at 49.82? No, I'm not even interested. It will become very interesting if ever we get to 42, because then I'll say, the magnet of the 200-period moving average is going to drag it up higher. So, yep, good work, very good work. Next thing is, Tim wants to know about CX. CX is CMAX. That is the Mexican cement company. I keep my eye on this. It's on my list of just things to periodically look at. I don't see anything yet, but when it moves really quickly. So all I'm going to say to you is, you know what you could do, and I know that you look at these things, you're quite prepared to look at things longer term. if you're prepared to say, look, I don't really care in the short term, as long as it doesn't go broke, I'm prepared to just hold it, because when it has its moves up, they are really strong. Then I would say to you, in this area, probably not today, 698, because it should be up much more. It's up a penny from yesterday's low. I'm going to say keep it on your list. Give me another couple of days. Let's look at it again, because when it moves real quickly. If it's able to hold above 6.90 as support in the next 2-3 days, then I'm going to say to you, you know what? Take a little position if you're prepared just to put it aside and couldn't care whether it's going to go to 680 or 670 or 660, because there's that 200 period moving average in the weekly that says $7.77. Do I want to take as much risk downside as upside? No, that's why I'm saying let's give it a few days and see if we can find some kind of support. Keep it on your list, and it might be a little nibble at some point, and then you can add to it on a rally. That's another way to do it. So yeah, let's look at that. GT wants to know about Boeing. Oh my God, I haven't looked all day. Boeing is up another 6.41. Leg D continues high. Now, the thing about this kind of leg D, when it breaks out from that left side, right side price time match, which this cup formation has done. See, this cup formation is double cup formation. That says to me that you got to think of it as a huge bull formation, and D can hold higher by making what was support, was resistance, key support. So that goes to 376. So you might find that Boeing doesn't actually break 376 for quite a while, because this kind of pattern says when it turns down, it might turn down reluctantly, because this flagpole break in leg D is just so big. If it stopped dead at 382, I'd say, oh, just be careful. Looks like it's going to go to 371, 369. This one says I've got to raise the base at this particular point, and absolutely, it definitely helping the Dow on a percentage basis. In fact, what do you say? You said Boeing up 5, it's now up 6, 30 to 40 points of the Dow. Yeah. So that's important to note. And when Boeing finally turns down, we might find that Disney or some other Dow stock takes over its place, but maybe not with the same percentage, but still does it. So it's one to watch, and it is an important one, because it's been so, look at that breakout. This is like the dreaded H that breaks down. That's why we called it the dreaded H. This is a pleasant Y, double Y. All right, so that's that. Julie, EEM. Yeah, EEM, I'm having a tough time with the EEM. I think it's kind of stuck in the lower range. I don't think the American market is really the favorite right now. No matter what anybody says about the president, this market is cooking, and United States stocks are very appealing to a lot of people around the world. That's EWZ. I think was doing quite well. EWZ, yes. EWZ is Brazil is up $1.48 at 37.09. Leg C. Nice gap up. And it's right on the 200 period moving average. I'll be back in a moment. Down 107.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So EWH is Hong Kong, and it's trading at 23.39. Made a peak D in the monthly. Doesn't look too good. Made a pullback and hit the 200-period moving average in the weekly at 22.73. Trading 23.39, down 9 cents. It's like EEM. I just don't see anything here right now. I think FXI. I wonder if that's exactly the same thing. FX, yeah, same. They're all making the same thing. They're really hugging and testing their weekly 200-period moving averages. Question I had about, and Vail. Yeah, thank you for bringing up Vail. We had a caller about 3 weeks ago who was looking at Vail, and I can't remember. I do believe that I said it's looking better, and if you're in it, stay in it. But I can't remember if I said to add or what. But I'm looking at it right now, and it's gone to a leg C. It's 15.60 down 2 cents. I think it's going to go to a D. It's in an up channel on the weekly, and it's right in that up channel, but that's only leg C. It should still go to a D, and leg E in the monthly. I think Vail's acted extremely well. The big thing is, would I buy it right now? Well, it's been a leader to the upside, and now it's in the Vail, it's in the mineral area. I like it. I don't know if I would buy it right now. I'm not even sure I'd tiptoe in and add to it. Just because it's had such a big move, it looks like it needs a little bit of the time. It needs more time than price. Well, 1502 to 1470 will be 1450 will be key support. That's all I can say right now. It's acting very well. Yes, it's acting very well. If you said to me, would I buy, hold, or sell right now? I'd want to buy it on a decline. It still has to go to D, but somewhere in between 1502 and 1460, I'd like to look at it again because it's acted really well. So that's the answer there. Wouldn't short it, wouldn't do it. If you're holding it, keep holding it, and you would be thinking to add to it on the pullback. Next question was XRT first. XRT, did I do? No, I didn't. Whoa. Up 10 cents at 49.16. Just like a few weeks ago, it was trading at 53. In the 53s, peak E in the weekly. Oh my, 52.96 was the high on the 22nd of August at peak F, and now it's just down, down, down. This is not good news. Yeah, you got to wonder, why is the Dow up if the retail sector is so bad? Well, RTH, let's look at RTH. RTH is the one I really follow closely. Peak E in the leg E in the monthly, a leg E in the weekly, and whoa, C, D made a peak E in the daily, pulling back. It's still near the highs. There's definitely good action in terms of weekly chart where it is. So all I can say is that I'm watching this really closely. The market vectors retail ETF, whew, not good. Next question is XAL. XAL. It was not good yesterday, and it's running nicely today. Up $1.54 at 104.33. I'm treating it as a bounce for now. Yep, nice bounce. It needs more than this to really impress me. Just a bounce. Now the IAI, which is the broker dealer, yesterday was looking horrible, and I said there must be a turnaround. Really nice action today. Up 0.88 to 63.12. The iShares broker dealer and securities. But is it just a bounce? And then we start going down. Or is this something brand new? Is this now a new sector that's come on fire? Well, we won't know, will we? Not at this particular point. The XLF is up $1.19%, up 33 cents at 28.02. Nice bounce. A little bit better chart formation. Certainly the monthly is still holding well. Keep your eye on these, because we might find that the market starts to just slowly, not necessarily deteriorate, but start to bump into a lot of resistance. And if this sector, the financials and the broker dealers come on strong, you've suddenly got yourself another one. Yes, we are still long in the SLX, that is the steel ETF. It's doing real nice, up 58 cents. It's up 46.96. We're up about 3 points from our buy. This is leg C in the Chapman Wave left side, right side price time match. We've got until, today. Well, we won't be able to do it today. That was for my first left side, right side price time match to try to get to the whole 48s. It hasn't got there yet. Now I'll have to extend it a little bit to the right. And this Chapman Wave inside wedge target line is really the one that I'm focusing on. And that's at 47.90s within a couple of days. Gee, I don't know how it can do that. But that's really what I'm watching. And one of our steel stocks is doing okay. It was, up 2.28 today alone. Very nice. It's done really well. And we've got a brand new stock that we bought yesterday in an area I haven't even discussed in months, maybe a half a year, maybe a year. But we got into it, and so far looking real good, up over 3%, actually up over 5% since we got in yesterday, I believe. So we'll see. Next question is ODFL. ODFL. Arch formation, I'd be real careful. I don't see anything just here at 157, not sure what it is. Old Dominion. Old Dominion freight line. Okay, so this is not participating. It's kind of stuck. It's stuck in the higher range of the monthly chart, but I got to watch this real closely. It could start to turn down. So that's ODB. The next question is euro dollar. We did that correlation with the EWI. EWI is Italy, isn't it? EWI is iShares. Yeah, Italy. That's it. So Italy is pulled back sharply. It did go in the Chapman Wave. It went from a low bar right here. Put your up arrow when you identify the lowest low bar, and then you immediately count each successively peak. Peak A, peak B, peak C, peak D. How are we doing? Peak D is still very strong technicals, and then boom, turns around and dives from peak F and comes tumbling down. Well, what do I mean by the Chapman Wave methodology? Well, let me just go to this chart right here just to show those of you who are not used to it, right there. And this is it. You've tried to identify the most obvious low bar, merely count each successively higher peak, and you label them alphabetically, uppercase on the way up, lowercase on the way down. When you get to the fourth highest peak, peak A, peak B, peak C, and then peak D, that's where other things can happen, but it could still go to E, F, and G, nothing higher than a G, and that's what you got to be careful of. And Greg, I didn't even look at Greece. Is that G-R-E-K? I don't think I get that. G-R-E, oh, yes, I do. Greg is the global something or other, Greece ETF. Whoa, doesn't look good. Greece has a problem. A, B, C, peak D in the monthly at 1150, and now it's trading at 792. Just be careful of Greece. Love the food, just be careful of the stock. And now what we need to look at, let's see, I got a question. Yes, stochastics, volume. Okay, volume, the DAX. DAX is DEDAX. Oh, man. DEDOW. There you are. This is the DAX, but it's based on the Dow Jones German index, and that is trading. Yeah, this is kind of stuck. It's just stuck. That's all I can say. It's not going anywhere. It's in the lower range, made an arch formation. I don't think it's so great. I'll be back in a moment to TLT. We did big outflow Wednesday and Monday. Really? Okay. I'll be back in a moment. The Dow's up 153, S&P's up 12, and I'll be right.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
All right, so I've got an email asking, when's 24,000? When's 24,000? When's 24,000? You keep mentioning over the past months that we should be testing 24,000. We've tested it once, but I believe that there will be a very sharp decline in the Dow. And if, let's just say we're at 27,000, right? Let's say it goes above 27,000. So if it's a 2,000-point decline, it just takes us back to where we were a couple of months ago. But that's okay, because it's the number of stocks that have really started to deteriorate. And also in my newsletter, it's the number of stocks that we've identified in areas that are now in brand new moves to the upside that have the potential. I don't know if they'll do that, but they have the potential to become more intermediate term buys. And that's this whole thing about the rotation. We've never been here. We've never seen this kind of market ever. And when people say, oh, you can't say it's different this time, how can you not say it is different this time? It is very different this time. and we have to deal with it, and I'm trying to deal with it. That's just the way we look at it, and stepping aside, watching the Dow, getting ready for maybe some kind of short, but I don't want to get in too early now. I'm saying specifically what it is that we're looking for. Now we're getting into some kind of resistance. Will the S&P take over? Will the IWM and the XLF take over and start moving the market higher while the Dow takes a 400-point breather? I mean, that's kind of what we've seen. That's what we're dealing with. Try to do it the best I can. So within that context, what we're looking at right here is that the very short term is saying now we've got to keep our eyes on the whole rotational aspect. Why? Because we could, in fact, see the Dow and leg E in the daily start to take a bit of a pullback, maybe for a couple of days, and then maybe next week we get a peak G/C, and the following week we get that D, and then you got to be careful. The closer we get to the election, I think the closer we're going to start seeing the volatility increase, but the volatility means downside, but it's how we rebound that's going to be the issue. That's why I'm saying it's not a problem to have some cash ready. Get cash ready for one of those crazy things that happen. I think you're going to be using it at some point. Be careful, that's all. But we are only long. We're having a short position at this particular point. Chances are we're going to start a short position very soon. Have a great day. Stay tuned for Steve, Dave, and Tom. I'll be back tomorrow. Check out my opening calls, my daily newsletter, and I'll see you tomorrow. Have a great day.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.